What is Sensex, how it works, which companies are part of Sensex, and how Sensex is calculated. These are all the questions you have asked on the internet, and I will be answering those questions in this video. Hello and welcome to Concept Bug episode number 6. In today's video, I will be answering the question what is Sensex and how it works. Before starting with the topic, I would like to inform you that we have covered many topics in past few days, which includes what is stock market, what is an IPO. We also learned about the Nifty 50 index. If you are interested in learning those topics, I have placed the link of that playlist in the cards. You can watch that after completing this video. So starting with the question, what is Sensex? Sensex is a broad-based stock market index of BSE. This index includes top 30 companies that are listed on Bombay Stock Exchange, and these companies are selected based on their free float market capitalization. The name Sensex is a portmanteau. Now you can call it an abbreviation of the word sensitive index, and this term was coined by Deepak Mohani, who is a stock market analyst. Now the proper name of the index is S&P BSE Sensex. S&P stands for Standards and Poor's, which is a global credit rating agency. Now what is a credit rating agency? I have made a separate video which you can watch it here. S&P has a technical expertise in building the index, which it has licensed to the Bombay Stock Exchange. So the index carries the tag S&P. In simple words, Sensex is a market index. Now you will say, Shubham, what is a market index? For that, I will take the same example that I took in the Nifty 50 video. If I take a book and I want to know what is this book about, how can I know that without reading the whole book? The answer is simple. I can just read the index of this book and know what is this book about. Similarly, BSE has an index, S&P BSE Sensex. You can simply call it as Sensex. Now, people who are investors, traders, people like you and me who are retail investors, and also the institutions like hedge funds, banks, insurance companies, and other financial institutions regularly monitor the performance of stock market. But it is very difficult because on stock market there are thousands of companies listed, and it is not possible or relevant to evaluate each and every stock to understand the performance of stock market. So to resolve this problem, a small group of companies is selected from the listed companies. These companies represent different sectors of the economy, and when these companies are selected and come together, an index is formed. Now Sensex is an index of BSE. On BSE, there are more than 5,000 companies listed, and out of these 5,000 companies, 30 companies are selected and brought together to form the Sensex index. Now, the methodology used to select these companies is free float market capitalization method. Companies also need to satisfy 5 major requirements to be part of an index. These includes, the first one is company has to be listed on the Bombay Stock Exchange in India. The second one is it should be large or mega cap stock. Third one is it has to be relatively liquid. Fourth one is it must generate earnings from its core activities. And the fifth one is company must contribute to keep the sector balanced with the country's equity markets. Here you can see the list of companies that are part of Sensex, and these include Asian Paints, Axis Bank, Bajaj Auto, Bajaj Finance, Bharti Airtel, HCL Technologies, HDFC Bank, Hero MotoCorp, Hindustan Unilever, Housing Development Finance Corporation, which is HDFC, ICICI Bank, IndusInd Bank, Infosys, ITC, Kotak Mahindra Bank, Larsen & Toubro, Mahindra & Mahindra, Maruti Suzuki, Nestle India Limited, NTPC, Oil and Natural Gas Corporation, which is ONGC, Power Grid Corporation of India, Reliance Industries, State Bank of India, Sun Pharmaceuticals, Tata Consultancy Services, Tata Steel, Tech Mahindra Limited, Titan Company Limited, Ultratech Cement. Now the value that you see on the Sensex, which today is close to 36,500, many people don't know how this value is calculated, and many people have a misconception that it is a sum of all the LTPs, last traded prices of the stocks that are part of index. But this is not a correct assumption. The index value is calculated based on the free float market capitalization methodology, which I have clearly explained in my last video, which I made on how to calculate the Nifty 50 index value. Now if you want to learn that, you can refer this video, and it is very similar to the Nifty 50 index calculations but just you have to change the base values of that. Now many people have a question in their minds, what is the difference between Nifty 50 and Sensex? Because we regularly hear that today Nifty is up, today Sensex is down, and as an investor it is very important for us to understand what are these indices, what are their differences. Now here is a simple explanation for you, explaining the difference between Nifty 50 and Sensex. Now there are two major stock exchanges in India. The first one is NSE, National Stock Exchange, and the second one is BSE, Bombay Stock Exchange. Now there are more than 1700 companies listed on NSE and there are more than 5000 companies listed on BSE. Now the most popular index on National Stock Exchange is Nifty 50 index and the most popular index on BSE is Sensex. The Nifty 50 index includes top 50 companies that are listed on National Stock Exchange, and the Sensex index includes top 30 companies that are listed on Bombay Stock Exchange. The methodology used to select these companies is similar for both the indexes, which is free float market capitalization methodology. Now the movement of these two indexes, Sensex and Nifty 50 index, is based on the stocks that are part of the index. Now there are multiple factors and number of factors that can influence the value of these stocks, and whenever the value of these stock changes, the value of these indices also changes. The factors could be like an election result, RBI changing interest rates, a trade war between two major economies, or an actual war. These kind of factors affect at market level. If the companies that are part of index grow their business, grow their profit, the share price of those companies also increases as more and more people are interested in investing in those companies. As the share price of these companies increase, the index value, which is dependent on the share price of these companies, also increases. To sum it up, market indices act as an instrument to measure the performance of stock market and to some extent to measure the health of an economy. Now there is a bonus fact for you. Bombay Stock Exchange (BSE) was established in 1875, almost 143 years ago, which makes it the oldest stock market of Asia. I hope you have learned what is Sensex, how Sensex is calculated, and which companies are part of Sensex index. We also learned what is the difference between Nifty 50 index and Sensex. If you find this video interesting, you know what to do. Share this video on your Facebook, WhatsApp groups, or any other social media that you use. That way you're not only helping me, you're helping your friends and family. That way you're doing something good. If you're new to the stock markets, I would recommend opening your Demat Trading Account with Zerodha. Zerodha is India's leading discount broker with state-of-the-art setups for investing and trading. There is a link in the description. Click on the link and you will be directed to the account opening page where you can easily open your Demat and trading account with Zerodha. I try to create simple videos with decent quality and I like to create these videos. If you also like to watch these videos, let me know in the comments, and if you want more videos from me, consider subscribing my channel. That's it for today. It is always great to learn something new, so keep learning. Bye bye.